Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is Alex. Alex is the guy who saved THORchain. Hello, Alex. How you doing?
Hello, guys. Thank you for having me. I'm doing pretty well. Having coffee, you can never go wrong.
Yeah, I mean, you need a lot of coffee lately because you've had a lot of. The last few months for you have been, I would imagine, were pretty extreme, especially during sort of the stressful period where everybody thought THORchain was on the ropes. And, you spent a lot of late nights and probably a lot of coffee coming up with the solution for how to fix it, yes?
A lot of coffee.
Well, I mean, as someone, I participated in THORFi, and we're going to get into the details of this in a second, but the THORFi lending program, which effectively became insolvent, and you were the guy who figured out how to sort of unwind all of that and get THORchain up and running again, and get people paid back who were part of the insolvency in a very short time frame, in just like a few weeks. Like, it really wasn't that long. I mean, it felt like forever when we were in the middle of it, but the actual time involved was not that much. Yes.
Yeah. Well, it was like 2 or 3 week period of looking at proposals, and then, but like in reality, funnily enough, I wrote the proposal the same day it got voted in. So I came last minute. When overtook to the right lane. It was funny, but yeah, it's an interesting story.
Yeah, so let's tell the story from the beginning, right? So, how did the crisis happen, and what was the crisis? So, THORchain is this decentralized DEX, basically, that's permissionless, and it's one of the largest DEXs on the internet, and by far the favored in many circles, right? Even a lot of centralized exchanges use THORchain sort of to back up their own liquidity in many instances. So THORchain got adventurous, created a thing called THORFi and Thor lending. And because, to tell the story very quickly, because inside of THORchain, everything is translated into RUNE, which is the native token of THORchain. And there are liquidity pools which straddle the THORchain and all of these other chains. And what happens is when you're trading from one chain to the other, the token that you're trading gets exchanged for RUNE tokens inside of THORchain, and then moved to the other chain where it's still a RUNE token, and then changed into whatever you're trading for on the other side, which is very ingenious, right? Just translating everything into RUNE internally is pretty cool. And so with THORFi, they then decided to get adventurous, and this was, we now know, a mistake. But they basically said, look, if you want, we're going to offer collateralized loans against Bitcoin and some other coins. So you put your Bitcoin into the system, where it's immediately sold for RUNE tokens. So it's translated into RUNE internally. So the Bitcoin's gone, right? Like, they don't have it somewhere anymore. It's just in RUNE inside the system, I believe. And you can correct me if I'm wrong on that, but I believe that's how it works. But basically, when you take out a loan, you can take out like 50% against your Bitcoin. And there's no time horizon for paying back the loan. There was no interest, which sounded like a good deal, right? It was a great deal. It sounded great on the surface, and the whole thing depends on RUNE becoming worth more faster than the collateral, right? So if RUNE suddenly doesn't do that, like Bitcoin doubled overnight from like 50K to 100K, and all of a sudden it was like, oh shit, RUNE isn't keeping up with it, and so people started to panic and say, oh my god, the THORFi loans are going to become insolvent because the mechanism has to print RUNE to pay people back, right? Like with their collateral, the mechanism internally has to print RUNE to buy the amount of Bitcoin necessary to pay the person back, while Bitcoin is doubling and RUNE is going down. Did I capture that correctly? And please add color.
Yeah. So, well, first off, THORchain was always adventurous. You don't get to design something so innovative without being a little bit on the risk taker side.
Sure.
And importantly, these risks were always communicated, in my opinion, properly. Always, ChaosNet and, articles detailling the risk. If you go back and read articles from back then, from 9 rounds, from THORchain, they mostly say, there are risks, and these are some of the risks. There might be more. Do your own research, and this is a product that you can or make use of, but you have to know what you're doing with. Now, the problem was from the beginning that THORchain's liquidity needed to scale because that's what brought value back then to RUNE. And you really needed these deep pools because the deeper the pools were, the cheaper the fees. So this is when all of the thinking around savers and lending started. How do we make those pools deeper? How do we bring value to RUNE? How do we make those node bonds also worth more so we can get more liquidity in? So it was all in this positive that how do we stimulate things to grow? But of course, there were some missteps along the way. Now, actually, there came streaming swaps. And streaming swaps achieved product market fit immediately on THORchain. Its revenue's up, its volume's up, its swap fees up. But the train was already too far on the other way to scale, which is savers and lenders. And it was kind of difficult to stop. So now you have this, THORchain is doing pretty well, and it could grow a lot thanks to all these new THORPi products, but there's also some risk involved. And then what you said happened. And the problem is the availability of the exogenous assets to trade. You have Bitcoin, you have ETH. Inside of THORchain, they're controlled by the vaults on THORchain, and they were collateralized nodes. Those would erode away when RUNE price went down. Just like when RUNE price went up, it absorbed them like a black hole.
Yep.
So as soon as you started seeing RUNE going down, not only was there an insolvency, there was also a terminal risk of THORchain not being able to even have swaps anymore, to not be useful anymore. And then you don't have any assets left to pay anyone, and you don't have any flows left to pay back even in the long run. So that's why there was this decision. That it was a controversial decision. I won't get into it. There's a lot of things written about it, but a decision to stop THORFi. So THORFi stops all of a sudden, and people are like, wait, hold on a second. Then it actually have false stop, where it resumed again, like a governance crisis of sorts as well, and then it got stopped again. So some people managed to close their loans or exit their savers. Some people didn't, and now we cannot, we declare THORchain. THORchain was declared insolvent, and now what do we do? And now who I was, I was just Alux from the competitor, actually, right next door. My protocol co-founder, Code is forked from THORchain. We understand THORchain deeply. We care deeply about THORchain as well. Our mission was always to bring redundancy to the THORchain ecosystem because we just think it's that important. And our mission, THORchain could have died and we would have made a buck, but our mission would have been unfulfilled because there's no redundancy in cross-chain. Even if it's just us, it's still not redundancy.
Yes.
So I actually started getting involved in.
So let's sort of characterize
all this.
Let me just sort of lay this out because I want to make sure the numbers are out there too. So when the decision was made to dollarize this debt, because initially the debt was denominated in Bitcoin, right? So I actually participated in THORFi, so I had some Bitcoin collateral in the system, right? And my collateral effectively doubled, right, in value at the moment that THORchain stopped from when I put it in, right? Because it was like 50 or 60K or something like that, and it was like roughly 100K in Bitcoin denomination when the chain stopped, or when THORFi stopped. Actually, the chain never stopped. Just to be very clear, the chain continuously worked and was reliable throughout all of this.
Swaps,
Yeah. So, but they sort of turned the spigots off on THORFi, which meant that we couldn't get our collateral out if we paid back our loans. And then the debt was dollarized, and in dollar terms.
Yeah. Let me explain a little bit there, and I'll say the amounts. I think is what you were getting at, because the price tag was $206 million at that point. But it was never really dollarized. And let me give a little bit more context.
Okay.
So there was all of these kind of, THORFi got paused, and there started to go all of these proposals out. I would read them as well and go and ask the authors, because I know many people in the ecosystem, give them some feedback, have calls, have meetings. And as time went by, nothing really seemed to be the right path forward. And we all felt like in a landlock until there was like this boiling point where there was an unsatisfactory proposal being brought up by Nine Realms. Nine Realms are great, by the way. Just the proposal was just there was a few flaws into the design that made it very painful for validators. And these validators, they've also been, diamond handing RUNE from $10 back down to $1. They have these huge amounts of collateral in the system as well, and now they're going to get further punished for it. So they started to leave, right? And that's when I got involved on the 2nd of February to write the proposal. I published it the same day. My sister was giving birth. I was driving in the highway.
Oh my God!
On that day, it was a crazy day. But we managed to get that proposal passed pretty fast. And the reason is we don't really take we take a very interesting approach, and it's actually based off a little bit on TradeFi. And that's why the dollarizing part I brought it up in my thinking, which is some people were saying, look, let's pay these guys in kind someday, right?
Yeah.
And there were some ideas on how to do it, but in the end, like THORchain has flows, and of course, if these cash flows grow, it can make fulfill its commitments faster. But if not, and Bitcoin keeps going up, you just have a never-ending payback, right? And a very weird system.
Yeah, so I just want to make sure. I want to make sure that's really clear, right? So because the system owed a bunch of people $206 million in today's money, but if it's in Bitcoin, let's just say it's all in Bitcoin, just for just to make it simple. And let's say Bitcoin went from 100K to 200K. Now all of a sudden that debt is roughly $400 million, right? And so THORchain if THORchain has to keep paying it back denominated in Bitcoin, it might never catch up. Right, but THORchain does have the ability to pay something back because it's making money, right? Yeah, and the validator
it's making a lot of money.
It's making a lot of money,
making $30 to $50 million a year.
Yeah, which is huge,
and that's kind of part of that was part of the reason it could survive. Huge cash flows, and a lot of people who care. But going back a little bit, we also didn't dollarize it because dollarizing is also a problem because it will also take a shitload of time to pay. If you kind of say this is a debt I'm paying down, but also what if the opposite happens? What if crypto crashes, right? And now we have 10 times less volume, and you have Bitcoin back in the $10,000 and ETH back in the $300. Now what? Now how do you pay back this huge dollar amount? So actually, the proposal did neither, and it did something that comes actually from the traditional legal system in bankruptcies, which is converting equity to debt. Now, there are two types of bankruptcies, Chapter 7, Chapter 11. Chapter 7 is there's assets in this company or this entity or this protocol, but it's not viable anymore, right? If this thing keeps operating, it will just keep leading to death. The business is not viable anymore. Think Blockbuster. It didn't matter how much debt, how much assets are. It's not viable anymore in a world with Netflix. It's not going to survive. Yeah. So you just go and you take it apart, pay all of the assets back to the creditors, debtors, whoever, everybody who's distressed, and just give it back. Chapter 11, though, is when the business is viable. The problem is its burden. If it didn't have as much of a burden, it could survive to see another day and eventually make people back. We just have to all get together and agree on some new terms under which we all can come out of it together. Right? So that's Chapter 11. Now, within Chapter 11, there's several things you can do. Right? You can renegotiate payment terms. You can do all sorts of stuff. But one very interesting one is when you convert debt into equity. What you do and say is, look, the current owners of the company or part of the owners of a company, they mismanaged and they have this big debt they can't cover. Let's give the shares of the company away from the owners and to the debt holders. Now they no longer have any debt, dollarized or in kind.
Right.
They have now equity in the business, and we already established this business is viable, right?
Right. So sorry, question about this though. So, but how do you decide how much equity? Isn't the debt dollarized effectively at the moment that you assign an equity value to it?
Really, the dollarization didn't matter. The question was the reference price for how much who got, like the Bitcoin guys versus the ETH guys. So there was more Bitcoin than ETH. We could have assigned half the value to it, let's say 105 million or 105 units, and if they got the same ratios, it's still the same thing because the question is how much equity it was.
Yeah.
So
Okay.
it didn't really matter the dollar amount. It's not really dollarized. It's a reference price for sure. And some people might use it as a, I think I'm whole now, point.
Yeah.
But the truth of the matter is they no longer hold any debt, dollarized or in kind. They now have a share of the THORchain equity. And now, how does THORchain work? You said a little bit yourself. There's these cross-chain swaps, Bitcoin to ETH, ETH to Doge, Doge to BSC. These are pooled and paired with RUNE. And then nodes have RUNE on top of it. That's the collateral they'll get slashed from if they steal any of the assets, right? So you have this nice and tidy system. Now, the thing is, you have to pay LPs and you have to pay the nodes for them to remain in the system. Because if they're not getting paid, they're gone. So the decision was made to pay 10% to TCY holders, this new equity. And people might say, hey, why not 30? Well, because equity is profit, right?
Yeah.
10% is the profit of the system, give or take. If you start going to 30%, you actually start to get into the cost of goods sold. Now you start paying less to nodes and LPs. Now they exit. Now you have a smaller business. And yes, you keep 30%, but now have a very small part.
Okay.
So the 10% is actually a nice point where it's the profit. It's the icing on the cake. And it's what we can give these TCY holders over the long run to make them whole. But we can put a checkpoint here, but
let me
continue what makes it interesting.
Let me just do a little summary wrap up of what you just said. So THORchain, when it became insolvent to the tune of $200 million or so, at that moment there was a choice. One, basically the whole thing shuts down, and all of the validators and all the people who have supplied liquidity to the pools, they lose everything. Right. And, make the creditors as whole as possible and walk away. That's like option one. And, that was on the table, right? That could have happened. Option two was some sort of deal, which the validators and the liquidity providers are not going to like some part of that. They're going to have to give something up. They have to give up some ownership, and ownership in the THORchain universe basically comes down to profit sharing. So what part of the profits are you getting? Roughly correct?
Yep.
Okay. And so you came up with this new thing, TCY, which is THORchain Yield, the THORchain Yield token. So it's different from the RUNE token. And the TCY holders collectively are entitled in perpetuity to 10% of the profits. Or is it revenue or profits?
Swap fee revenue.
Okay, so it's revenue. So 10% of the revenue generated by THORchain in perpetuity. Which is kind of cool, because if you think THORchain is going to grow quite a bit from where it is right now, that could end up being pretty significant, right? So, that was the proposal, and that was the idea, and that was what was proposed, and that's what passed. Yes.
Yeah. So the interesting part there is the question started to become, and most of the flaws with other proposals is, okay, how do you get these distressed people to exit? And whatever haircut they decided, right, they need to exit. Now, if you just make these like debt claims before we came up with TCY, well, the problem is who's going to go and buy $1 worth of very long-term debt? Like, how much are you willing to pay for that in crypto? 1 cent, 2 cents?
Yeah.
There were so many things that you could think on how to do things, but it always ended up being you're either paying people back in 67 years if you don't grow, which, let's grow, of course.
Yeah.
Or they're getting cents on the dollar, or you're killing the ecosystem. There didn't seem to be a fourth choice. And what the TCY introduces is, by making TCY forever 10%, now you actually and making it very attractive tokenomically as a instrument, which we can talk a little bit more about, but making it a very interesting token. Now what you have is who's bailing out the exiters, the distressed users, is not the protocol. It's new buyers. That's the liquidity that's coming in to purchase the TCY out of these people's hands. So you said, hey, Bitcoin can go to 500, right?
Yeah.
That could happen. And I used to have Bitcoin, and right now the price of TCY is something, let's say 30 cents. Well, I can be willing to just sell at 30 cents, take the 70% haircut, and buy Bitcoin, because I think that's more likely to go out. But that's fine. I chose where to go out. Instead of all having to coordinate, how much are we each getting? everybody decides where to exit. Now, going back to numbers, there were, during the meltdown, there ended up being $60 million in exogenous assets in the protocol. So $60 million of Bitcoin, like real Bitcoin, really.
Yeah.
All the rest of the equity, around $500 million, was RUNE.
Yes.
So that went to, without the exogenous assets, that's zero. So you can forget about that. So there was only really $60 million of real money in the table when shit hit the fan. So, and there were $300 million of debt. Yes, the 200 of saver surrenders, also roughly $100 million of dual LPs, which we can talk more about.
Oh, right.
Their way to recovery later. But what that meant was that the best people could hope for in a chapter 7 was 20 cents. So that was like, kind of like, can we beat that? Can we beat that? And, we came up with TCY, the proposal, started working on it. Many people kind of were like, oh, what if it goes to 5 cents? What if it goes to 10? The design is such that it's a very attractive token to enter.
It's got to be a good token. It can't be like this crappy little debt coupon that you really don't want, but you take it because it's like some Mt. Gox bullshit thing.
It's a fun,
you don't want
exciting.
That. You want it exciting. You want it awesome, right? And so you actually crafted something kind of awesome. So right now, so basically, in order to make all the debt holders whole, the TCY token that was issued, if it becomes worth $1, everybody is made completely 100% whole. Correct?
Correction. $1, not only on its value, but value plus past payouts, because it's paying you every day. You get paid every day.
Correct.
So if it's worth 90 cents, but it's already paid out 10 cents over the last 2 years, you're made whole. So it's quite interesting. You have two components of how you're made whole: the value of the token, what you get paid today, plus what I've been receiving before I decide to sell.
Yeah, because every day I'm getting some yield off of that. That's why it's THORchain yield. I'm getting that 10% revenue, my share of it yield, and it just goes into my wallet, right?
And for reference, we touched 54 cents on launch day, and it's been sitting pretty consistently around 30 to 33 cents since then.
Yep.
So that means so if
I wanted to exit right now, I would get a third of my initial collateral, bottom line, right? And if I might just be like, you know what, screw this. I don't believe in this TCY thing. I'm out of here. I'll take a third, right? So, or I can wait. And now here's something really interesting. You'll like what I'm going to say next, because I've done a little bit of calculations here. So I did the Super Bowl case, right? Like, what if THORchain had basically had the revenues of Binance? Crazy, kind of crazy, I know, but let's just go there for a second. If that were true and you held 250,000 TCY tokens, you'd make like, roughly $60K per month in fees, just in RUNE, right? And so that's $720K per year. Now, of course, that's the crazy, that's the crazy vision, crazy bull case, but that's just to give you an idea of like what could happen at scale, right? So it's not schlumpy. It's pretty good.
Yeah.
Yeah. So sorry, I interrupted what you were saying, so please continue.
It is an attractive token to hold. It's already touched 54 cents. Why that number is relevant is it actually went down from the reference price. So when it touched 54 cents, an ETH savers or lender would have made their money back in the whole. In just 3 months since the meltdown, with no lawyers, zero legal fees, zero hassle. So just compared to like Celsius, that's still ongoing. It's been 3 years now. It's probably going to be 3 more years. We're talking about millions and millions of dollars, and maybe it doesn't go well. Maybe we'll get some sense, and the opportunity cost is going to be huge. Here, people want a Bitcoin. You can get your Bitcoin back today, 1/3. Yeah, it sucks. Or you can wait a little bit more to juice it up. But you're the master of your destiny. You have certainty. You know what's going on. And you know what the path is to be made whole if you wait. And you know what the risks are not to. And it's your choice. And I think giving people max choice, I think is the right way to go.
Yeah, everybody can choose their own deal. Right? It's not like Mt. Gox or something where, some lawyers somewhere 7 years later come up with a deal for everybody that nobody likes. Like, and also you miss those 7 years of maybe using, a third of that capital to do something else. in this situation, it's very granular. Everybody could choose their own adventure, choose their own deal. And the market decides like what deal is available on any given day, which is fantastic. And for example, I know in the FTX unwind, they basically liquidated everything, and in part of that liquidation, they sold about $200,000 worth of shares. I think it was in Cursor. It was either Cursor or the other AI coding software that was worth billions today. And so the FTX did not get because they did this TradFi unwind. So TradFi unwinds hurt debtors or creditors, right? It's not good. Nobody wins, right?
No, I would like to speak out in favor of it.
Okay.
My brother-in-law is a bankruptcy lawyer, and like the system is meant to help you. Now it can be abused.
Yeah, it's meant to.
And some processes can go pretty bad.
Yeah.
But some processes can go pretty good as well. Now this is a very unique example of a very successful restructuring of a blockchain. It was tried with Terra, failed. Granted, they had a 30 billion hole versus a 200 million one. And they didn't, their business relied on that which went bust. Yeah. Whereas THORchain, THORFi went bust, but the moneymaker is swaps. So even if these went bust, this can still pay for these broken crystals.
Yeah.
Right? So that's kind of what's happening. So it's just a viable business. It had a viable path forward, and we can work it out. But in traditional finance, it can also go bad, and it can also do well. It's still a little bit sometimes a flip of the coin. Now in crypto, though, when they go bust, they really go bust. Typically, these Web2 companies, Web3, like CDFI stuff.
Yeah, I've never seen anyone solve this problem. You are the first person. This is like some Gordian knot that nobody's been able to figure out. And as far as I know, you are the first and only person that has cracked this. How did you come up with this? Is it because your brother's a bankruptcy lawyer, so like some of these ideas were in your head?
He helped. And he and I, we discussed a lot. We're both a little bit philosophers, and we just talk a lot about cases and stuff like that. Also, our experience with Maya Protocol. As I was saying, Maya Protocol is a fork from THORchain, and actually we launched fairly. And the way for us to get compensated was a success fee, which we decided to be 10% of sub fees, which we tokenized in a Maya token. Does that sound familiar?
Oh, so you had a TCY token in air quotes.
Had it all this while for 3 years now, and this is how we made equity for ourselves in a fair way. Because if Maya didn't make any volumes, we didn't make any money. That's fair, right? So this equity that went to our protocol development is the same that we used to pay back creditors on THORchain, since THORchain didn't have one. So obviously TCY is take two. It's a superior token. So far, I have my plans on how to go back and improve Maya as well. And we have many opportunities also on TCY to create sources of buy pressure, which will be pretty interesting and stuff like that. But between that and the debt to equity stuff and some other ideas TCB had and his proposals, all of that came together into Prop 6 and our version of TCY. So it's been a journey. Definitely a lot of coincidences here and there.
That's crazy. I mean, you were like genetically engineered to like solve this problem and happened to be in the right place at the right time. Oh my God, we got so lucky with you. I mean, just from me, thank you so much for what you did for THORchain, because I personally benefited from it. So,
my pleasure. And it was not only me though; it's all the other authors, all the people that supported Maya all this while.
Sure. Yeah.
And so many people that got involved in voting for this, implementing it, helping us test it, helping us deploy it, supporting it in the user interfaces. There's just so many hearts and minds out there trying to make people whole. And I find that so nice because there's no regulatory body telling us to do so. There's nobody making THORchain make users whole. THORchain could just as easily say, sorry guys, you knew the risks.
Yeah.
And I'll just carry on doing my swaps.
They could have.
Yeah, I mean, it totally could have. THORchain its nodes are sovereign inside THORchain protocol.
Yeah.
Just like Bitcoin nodes are sovereign. There's no governing body that can tell Bitcoin, to make more BTC. I just find it so nice and so heartwarming that everybody pulled through together and looked out for each other and decided, this is the right thing to do. Let's do our best effort to make people whole. And, everybody voted for TCY against many times their own interest. So I'm just very happy to see that. And it goes to show how free, sovereign humans will do the right thing. What actually corrupts us are all of these bureaucratic systems, nameless systems that, push us down. So we didn't need this court or these whatever to tell us what to do. And I find it such a bullish case for, free markets, libertarian values, for, crypto as money, and decentralization and permissionlessness and privacy also. Like it's a case for humanity. I mean, these kind of governing bodies.
So I think that, I personally have never seen a bankruptcy or a, insolvency go well. And I've never seen one, really benefit the creditors. I know you say that they do and they're meant to, but I've never seen it. And especially in crypto. And I've never seen one that's taken less than 7 years. So the fact that this was resolved excellently, granularly, where everyone can choose their own adventure and quickly, like within a matter of weeks, I marvel at. It's an achievement.
Yeah, the first pauses were in January, sometime 2025.
Yeah.
The second pause was 27th of January. The proposal was written and passed on 2nd of February. And by 5th of May, TCY was launched. So a little bit over 3 months, which is nothing.
It's crazy. It's crazy fast. Yeah, amazing.
No legal fees. You could have gone back 30 to 50 cents back.
Yeah.
And then if THORchain grows, if THORchain grows 3x in volumes and fees, which is not impossible. THORchain used to make $500 million in volume per day regularly last year. So at some point, so we get back to that, given that TCY is today at 33 cents, it means all else held equal, TCY should be around at $1. Now, granted, there will be some more buy pressure getting near that $1 at the beginning. But if you hang tight and THORchain pulls through and remains at those levels, it's just a matter of time. So, it rewards the patient. It rewards those that also get involved and help build back. I'm just happy with how it's turning out.
Do we know?
I'm so glad it's making people back.
Yeah, no, it's fantastic. So who are the people, what percentage of people, first of all, have claimed, the creditors have to claim their TCY tokens. That's part of how it works, right? With the same wallet that they took the loan or interacted with THORchain with. What percentage of people have claimed their TCY tokens? And of those, what percentage have sold? Do you know those numbers?
66% claimed.
Yep.
It's difficult to know how many exactly have sold, but most people stake.
Most people are keeping it.
People are staked, correct.
Yeah.
And this goes to show that most people interacting with THORchain in the first place were big believers of THORchain.
Yeah.
They're not, they were distressed and very frustrated because of the uncertainty and not knowing what to do and, getting zeroed. But, now that they know with certainty what's going on, they have clarity. They're happy to hold on. They want to support the ecosystem. So
yes.
kind of removed.
Okay, so let's talk about the future and kind of like what's going on with TCY now. So I hear a lot of talk these days about Rujira, which is sort of another thing bolted onto the THORchain to sort of, how can we make THORchain volume go up? And Rujira is basically the thesis for that. I'll let you talk a little bit about that. And TCY is a new primitive inside of this new DeFi ecosystem. And people are, I believe, doing all kinds of new and interesting composability DeFi-like things with it, combined with, some other things on Rujira. Can you talk a little bit about what's going on now, what we can expect people to see with TCY in that universe?
Yeah. Well, THORchain is just poetry, man. It's like my fork THORchain, right? That's how we were created.
Yeah.
And when THORchain got distressed or my token design was forked back to THORchain, right? Well, with Rujira, it's also something similar because you were saying, "Oh, I've heard of no other case of like a blockchain bankruptcy," but Rujira went bankrupt too. Rujira was very viable DeFi, primitive, DeFi-centered, beautiful UX, genius devs protocol that, due to some over leverage on the treasury side, actually went bankrupt as well.
Because weren't they on Luna? Like, wasn't that the?
They used to be a smart contract on Terra.
Yes.
So these guys have survived a lot.
Oh my God, those poor people.
Yeah. So these guys survived Terra. They create their own chain called Rujira.
Yeah.
And they start releasing so many smart contracts there and user interfaces. Pretty cool stuff. Really, I know Hans for a couple of years. I integrated Rujira as a chain, just like THORchain integrated Cosmos. We love them, but they also went bankrupt, and for a different reason, a totally different reason. And what went down is actually that instead of having this kind of bankruptcy proceeding, it was bought out. It was bought out by JP, essentially, as he created Rujira with Hans. So
JP Thor, who's like one of the leading, he's arguably the leader.
He's one of the founders. I think THORchain is leaderless today.
Yeah, he's the most visible voice. Maybe put it that way.
He's a very outspoken person involved in THORchain. Yes.
Yeah.
And he's a great person. Makes mistakes as all of us do, but he made an amazing call there, deciding to bail out Rujira before THORchain, when THORchain was totally flush, right?
Yeah.
And he with some funding, he raises some funds. He buys out Rujira and buys their tech, their team, and essentially does a plan to merge the token into this new Rujira Alliance thing that's putting together essentially all of the overperformers in the Cosmos universe now to bring them into an omni-chain cross-chain environment. And that's what Rujira is. How do we bring all of these smart contracts, perps, order books, collateralized lending, auto-compounding structures, all of that, on top of this cross-chain hub.
Yes.
And it's pretty cool. But why I was saying this poetry is because I also think it's one of the things that we bring also THORchain back out of the hole. So it's all just like, it's so positive sum. It's such an infinite game. And people are so short-term thinkers and like fixed buy, fixed sum, zero sum. You take $1 hit, you took it from someone. But long-term, this is how things get built. People just creating value, making mistakes at times, but helping when you can help and being helped when you need it. So I love how that's turning out. And I'm very excited about Rujira. We'll probably release this week the first few smart contracts. I think it will be a turning point for THORchain. And the way it's designed, it's very safe. It's very much compartmentalized into, the app layer cannot really mint secured assets or really do anything.
It's not using RUNE it's not doing what THORFi was doing before.
Secured assets and RUNE lives in the app layer, but they cannot mint anymore.
Yes.
What can happen is that it changes hands up here, and that's what's generating economic activity. It can change hands up here. It cannot really mint more. So it will be generating fees without really costing the base layer or really risking the base layer. Now, a specific app layer can have risk. A specific app layer contract can go bust. So choose wisely and be careful. Do your own research. Be responsible. It's your money. It's your job to keep it safe. But I think as a general rule, I think Rujira will perform pretty well. Just look for it. And Hans and team are really amazing developers.
I mean, from what I've seen user interfaces that look very much like Binance, where there's perps, there's there's all kinds of and limit orders and the whole 9 yards. I believe that's so. Basically, if you wanted to, I said earlier, like if you had the trading fees of Binance, the TCY yield would just be insane, right? How do you get there? And well, you build Binance on top of THORchain. And Rujira, it looks to me like that's what they're attempting to do. And if they succeed at that, then you have a decentralized Binance where there's no KYC. It's just available worldwide as smart contracts but you get the exact same thing, you might get a lot of takers that sort of start moving over to that for the benefits that it will offer users. It'll just be a lot easier to use. I think the only thing it'll be missing at that point would be fiat, rails in and out. Like you'd still have to have a centralized exchange for that. But other than that, you would really have no need to go to a Binance anymore. You could just use that, which could be kind of insane. I mean, I think Binance as a DEX is like a holy grail kind of thing, right? So yeah.
I think it's still early days for this, and I think those of us here are early. So I'm excited, and I'm biased, of course. I'm building in the ecosystem, so take what I say with a grain of salt. But there's a lot of brilliant people working on this with amazing ideas and really looking at how to knack adoption. So I'm excited. And whatever it is that we build, XRP, Solana, 2-second block times, Rujira, all of the benefit, 10% of that is TCY holder. So we're paying back or fees to those that hurt, and I'm really looking forward to them being made whole as soon as we can.
Yeah, I'm looking forward to that as well. So okay, well, I think we kind of covered it. Is there anything else you'd like to add before we sign off here?
Yeah, get involved. There's a very nice TCY dashboard over on THORchain.net. You can see some stats there, how it's performing. There are the TCY protocol. The TCY is actually buying itself back as well. The protocol is constantly buying back TCY every day from different sources. You can read up on a little bit of that. That's always making sure there's ample buy pressure over the long run, and that's also something making the TCY token very attractive. And just there's still a long way to go. And I wasn't here involved in the THORFi decisions, and it was before I was involved. I was over at the competitor. My protocol still am, but now kind of working on both happily. But I think it's not said enough. Just in behalf of THORchain, like it went badly. Sorry. Devs weren't doing this maliciously. They were trying to do something revolutionary. In many ways, they've succeeded. In some ways, they failed. The protocol is owning up to it, and despite it shared responsibility with users as ample things about the risk were shared, but it's still also partly responsible for what happened. So I don't think people apologize enough. And now it's just head forward. We're in this boat together, and really looking forward to what's next in this chapter. But we're off to a great start.
Well, Alex, you did some extremely impressive work under severe pressure, and you did it fast. So you have my extreme respect and my thanks. Sure. So as beneficiary of all of that. So and thank you for spending a little bit of time speaking with us and walking us through exactly what happened.
My pleasure. Happy to be back anytime. Thank you for your time, sir.
Hey, my pleasure.
Hey, guys.
All right. My name is Mark Jeffrey. This has been Hash Rate. See y'all next time.